unfiltered opinions.
Introduce me.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
I'm Nicolette Mashile.
And I'm Simon Brown.
Welcome to Insider Exchange.
In Market Matters this week, we take a look at the developments out of the United States. The inflation print came through this week. Positive print of 4 interest rate cuts. We also take a look at the South African picture. SA Inc. is back in favor with investors, and we look at Starbucks. Very interesting corporate changes there, affecting the business, affecting valuations. Where do we start? What do we start with?
Start with Jerome Powell. 18th. Is it 18th September? I think it's 18th September. He's going to tell us whether it's 0.5% or 0.25%.
It is the 18th because ours is the 19th.
Ours
yes.
is the 19th. He's going to tell us half or a quarter. Because inflation at 2.9 now means that inflation is done. Like, stop stressing inflation. Don't worry about that. All you got to worry about now is jobs.
Okay.
And we're seeing some cracks in jobs. So, and that was his whole thing, right? Let's go all the way back to that first rate increase, whatever it was. And he said then, you know what, this is perhaps going to cause some real pain in the job market, and now we're going to start to see some pain coming in, and he's going to start some cutting.
One of the, especially with the jobs thing, one of the things that I remember clearly is he's one of the first central bank governors to sit there and say, the average wage rate interests me more than the NFP number. And that's very telling of what you're saying, Sai. Is he said, I want to see how the pocket is affected, how the wage rate moves, and that's going to be a bigger tell for me around the strength of that labor market. And he's been very, very careful about that. If we get this, if we somehow pull off this soft landing, and I know Petri, Petri's adamant. We've got.
I feel like I'm that guy on the side of the road wearing the cardboard things, ringing a bell. The end is
Petri's adamant we're going to hit a recession, and he's got data that supports that. Of course, that says every time we do see these rate cuts happen after these kind of hikes, we do go into some form of recessionary environment. But we've been debating whether or not it's going to be a soft landing or a hard landing.
I mean, we've been having that debate every decade. Every time the market pulls back, it's always, we'll avoid it. It'll be a soft landing. And there's casualties. Well, not casualties, but, there's collateral damage every single time that there's a significant economic contraction, aka recession. So I don't see how it'll be any different this time. I mean, this time it's different, right?
Yeah, so that's what I'm trying to think. Is it different this time? And what would make it different? So what would make it different? Things like higher levels of savings. We don't have that in US
We've
consumers.
got the highest levels of debt we've ever had.
Yeah,
ever.
well, the US debt is neither here nor there. 35 billion, they just print dollars.
The end of the petrodollar, perhaps? Potential end of the petrodollar, let me put it that way, frame it that way, rather than saying it has absolutely ended. But we know that the agreements with the Middle East to trade oil, essentially in dollar only, has ended.
Well,
so
I mean,
they're
Russia's
open
not
to,
selling their oil in dollars.
well, yet.
No, they're not. I mean, they're selling it in renminbi or
renminbi, yeah,
or
but
rupees.
Saudi Arabia still is, obviously.
Yeah. Saudi
So,
Arabia.
but when that ends, right?
Yeah, but more countries are doing that. You're very right. More countries are reviewing what.
Well, and we can take it a step further and look at what we're seeing as central banks buying gold. So I saw a chart which shows that a number of sort of, and it's more the BRIC aligned nations, so Russia, India, China, rather than your Japan's, Americas, and Western Europe. Since 2018, they've been buying, their treasury holdings are decreasing. And that accelerated after the invasion of Ukraine in 2022 for a simple reason, right? Because suddenly you realize that, hang on, you've got these reserves in dollars, but, they could get frozen. But more than that, you've also got all these treasury bills. And will the US do selective sanction default? In other words, they say to Russia, we owe you money for those treasury bills, orcs. You shouldn't have invaded. So we're seeing a shift there as well.
So they're letting go of those treasury bonds and rather backing gold, essentially.
Yeah. So there's certainly less interest in the dollar. But let's not kid ourselves. The dollar still remains I forget the number, and I actually saw it this week. Something like 70% of global trade is in the dollar. The euro's next at like about 15. The Chinese renminbi's down at like 2%. I mean, this is a dollar economy because everything else. So sure, petrodollar goes here and this and that, but everything else is traded in dollars.
One thing I've learned about China is they don't do things without an aim and without a plan. And as you're saying this around the gold reserves that are being stockpiled, I kind of went the devil's advocate route of it and thought, if the BRICS bloc stockpiles enough gold for it to have more in gold reserves, or a meaningful amount in gold reserves, you can start to have your currency backed in gold the way Muammar Gaddafi wanted it in the first place.
Oh,
Number
now you're
one.
talking about this is how you get assassinated. I mean,
but also
a revolution takes place in your country.
But also, in
suddenly.
addition to that, when it's literally a hedge against the United States dollar. If the world is still dollar denominated and going to remain dollar denominated, the gold price is valued in or benchmarked in US dollars, right? So at the point where you're holding enough physical gold reserves, any move by the US in an attempt to destroy the treasury bills
so the US can use their dollar as a weapon. They can weaponize the currency, and that's to your point.
But
now
this
you have
neutralizes that, right?
Yes,
so
exactly.
having gold neutralizes the impact that. Look at it from the perspective of now, 2024, versus 30 years ago, 1994, the amount of influence or the amount of weaponizing you could do with the dollar versus what you can do now. Now, I think there's a bit more mitigating factors where the dollar might not have as much of an impact. I mean, previously, the US would wake up, go to the Middle East and say, you know what, you guys are in trouble, we don't like what you're doing, sanctions, or we don't like what Iran. You can't do whatever, you can't do this, this, and this. I think we're definitely far away from that kind of world now. And you're starting to see that if the US would try to impose sanctions, they themselves know that they don't wield the same amount of power as they used to in the past.
Look at what they did to Russia, for example. We're going to sanction you, naughty boys, go sit in the corner.
And then China was like,
And
we'll take your
Russia's
oil.
like doing fine.
Well, except that they did take a couple of $100 billion of Russia's dollars, but
Well, sure, but I mean,
but
they survive, they carry on.
Sure,
like
sure.
life in Russia is not.
because they're selling oil to to
exactly.
India and China. But the key thing is none of this is happening in the next year to give the US a recession. So it comes back to what's different this time. So here's a fun stat: retail sales data came out yesterday in the US, month on month. So June was minus 0.02, July was expected to be 0.3, and it came in 1%. So way stronger. Year on year was expected, well, had previously been 2 and came in at 2.7. The US consumer is not breaking. Because what we've seen is firstly an unemployment rate of under 4%. So if you didn't like your job and there was a better job over there paying an extra $1 an hour, you could move because there were jobs out there. Because we got all that money, helicopter money during the pandemic, which has been spent, but it also strengthened households' balance sheets to a degree. People haven't been moving homes because they can't afford the 7% interest rates in their new mortgages. So they haven't taken on extra debt because they've gone and got a new Mac mansion or something like that. Maybe the argument is that the US consumer this time is in a better space than you would normally expect at this point in the interest rate cycles.
But we are seeing an increase in credit card debt in the US.
I was just Googling that, so I could
So
see that
that,
chart.
that is no, but to your point, Si, around
credit card
the
debt since before I was a kid. Yeah, but that's been, I mean, I've been hearing the credit card, you guys are not wrong, and it's a scary chart, but I've been hearing about that chart forever. And I mean, maybe one day it does blow up.
This is the same chart.
in
This
08
is the
it
same
blew up.
as no, but this is the same as when we look at the US's overall debt as a whole. I mean, to be $34 trillion in debt as an economy, that's another story. But let's move to South Africa because the result of all of these speculation around interest rate cuts is that risk assets are now more in favor, but also we've kind of done what no one in the world thought we could do. We
Keep the
managed
lights
to that.
What did we do?
Keep the lights on.
I thought you meant rip Australia at the rugby.
Hey, we're on a roll, hey? We're
like
on a roll
everything.
with a lot of things. But I was referring to the fact that the GNU hasn't collapsed yet,
Right.
Well, yeah.
which for market strength seemingly has been a positive thing. I mean, we can debate things around policy and how all of that's going to be
No,
affected.
but it's important. It's an important point, and we should pause there. It hasn't collapsed, and interestingly, the parties around it, ergo, what happened with the EFF and what's happening with MK, the parties around it are collapsing.
Yeah, interesting. I saw the story that Shivambo's left EFF and
Yeah, he left yesterday.
and there's like a ton of other people that are supposedly going to go. as well.
One or two, but they're all joining MK.
That's interesting.
So it's actually the coalition's almost getting stronger in a sense.
Yeah, so when you look at that, and that's what I was looking at this morning as well, is typically when you see political instability, the rand has always been a politically exposed currency. We all know that, and whenever we've seen some form of political instability in South Africa, it has negatively impacted the rand. This is probably one of the bigger moves in political times of late, since the formation of the MK and everything. I mean, Floyd Shivambu was a founding member of the EFF.
I mean, him and Julius were,
Exactly, and Julius has called him a brother, you know. So for something like that to happen, it shows you, when you look at something like the rand, that the rand is not as influenced by those sorts of political moves as the moves around the political formation-ish, I don't know what to call it now, that is in power, right? So if these instabilities were happening within the GNU, as Sai calls them, then maybe we would have seen a different outcome. But I suppose the rand strengthening here, financial stocks are on a roll. I'm looking at them today. They're up 1% today already. They were up 1% yesterday. It just... At the moment, SA Inc. is on fire.
Almost all of them. Quick point in the ZAR. We're also seeing dollar weakness. The DYX is down from 106 back in beginning of July, now trading at 102.9. So there's certainly some move there. But I mean, almost every chart I pull up of sort of, SA stuff, it's just running, and like I want to own some of it, but like I don't have any money left because I've bought everything. Well, not everything. I've just spent all my money.
We're talking about it sort of, pre this, where a lot of this stuff, and I was saying it's like a really boring way of looking at the market, 200-day moving average, the slowest possible way of doing analysis. But almost everything is trading above the 200-day in South Africa. And it's been a long time since that's been the case.
And that's
if you go and look at that,
bullish.
that leads to these like 3 to 5 year upward swings, right? And I think that's largely where we are as a market in the whole. So, and I guess this is a bit... contradictory, I suppose is the right word, where I think like I'm bearish the US, ringing my bell, but bullish BRICS in South Africa.
Yeah, and that's a hard one to play out, because as soon as something happens in the US, everyone just panics and goes and buys US treasuries. But I take the point. I mean, if we look at just from pure fundamentals, but also if we, valuations rather. I mean, South Africa is way cheap and the US is not. But even if we look at it from fundamentals, not saying the US is collapsing and disappearing, but we're in a significantly more positive space than we have been in the last almost 20 years.
And we've got a huge amount, even if the US pulls back 50%, we're still 50% undervalued. Do you know what I mean? Like if you go look at that valuation gap on the S&P 500 versus the top 40, it's massive over the last 5 years. And, roll that out for as long as load shedding's been around, and it gets bigger, and it's scary how big that gap is.
Again, as Simon said, it's amazing what can be done when you have electricity. Let's wrap things up with Starbucks. I know we were in the US, we came here, now we're back in the US.
So Starbucks was fascinating. I'm not going to do names because they're crazy. So you remember that Howard Schultz was founder, CEO, left, came back, left again. Just last year, and he got a new CEO, and that CEO now got kicked out, and the Chipotle CEO has stepped in place. And the net move, so Chipotle collapsed because they love him. Was it a her? Actually, I'm not sure. It's Brian Nichol, it's him. And Starbucks, it was a $20 billion shift from one to the other, essentially. Wow. As folks were like, so the thing is that Starbucks was the giant winner here, because the outgoing CEO folks just haven't liked for a bunch of reasons. And Chipotle has been, I mean, I looked at Chipotle, I think it was just actually, was it 2-3 weeks ago? I mean, they first came on my radar when they had, was it E. coli in their lettuce, which is really...
It's one way to make someone's radar. Sure.
No, which is really, really bad. And they had, anyway, and this is maybe a decade ago. They fixed that up. Their lettuce is no longer killing people. They roll out stores aggressively. They do things, I mean, the way they monitor, just how long is it taking a client from when they walk in to when they walk out? And they're using this, real-time data and that sort of thing. It's just been phenomenal in the QSR. Forget what the food is. I've never eaten at Chipotle in my life, but it's that just taking QSR to the cuttingest edge. And of course, the world says, can he do it at Starbucks?
As awesome as that is, it feels so inhuman.
The deadly lettuce, or
No, not the lettuce, polony, same, right? But, but
please don't bring up listeriosis. Okay,
Yeah.
we've been through a lot.
no, the whole sort of methodology of, it's like a little food factory, and you go in there,
Welcome
and
to capitalism.
it just seems, the little mom and pop restaurant down the road, you're going to get better food, I don't know. It just feels very inhuman to me. I don't know.
I agree with you 100%, except welcome to capitalism, right? What are
Like,
you? You're
you want to be the
Chipotle.
CEO of Starbucks or Chipotle. You're not into restaurants.
No.
You're a process
Into
engineer.
you're a process
right?
engineer.
And you're just a numbers guy.
And every 3 months, you got to publish a set of results, and they got to be
And they gotta be
better
up.
They got to be last time, and you've got to have increase in same store sales and margins, and it's
wild.
an absolute treadmill.
I'm trying to figure out why Petri is so surprised by capitalism, like he hasn't been operating in this environment his entire life.
No, this
is not
surprises me.
news.
All my friends who claim to be capitalists, and they're like, "That's not fair." It's like that's the capitalism.
That's how it
If you-
works.
Nothing about it is
I'm the
fair.
socialist here. I'm the one who's been pointing out this horrible stuff, and you've been making profits. And
But you've been making
cola.
profits too. I mean, come on.
Okay, I've been making some profit too. Yes. And I swim in the sea in Durban, so me and Nicola, we're
Good friends.
Look, as long as it's not on your lettuce, you'll be fine.
Look, I mean, Starbucks has I don't know too much about Starbucks, I'll be honest, but I do know that what they do with their loyalty program is like next level genius.
Yeah, no, that's a conversation we're going to do a deep dive on one of these days. The Starbucks business model and how they are a bank without being a bank. But for now, that's Market Matters for this week. We move on to our deep dive, and we're deep diving into corporate structures and how they're affected by things like rights issues and other corporate actions. I suppose this is sparked by, in part, Pick and Pay and the recent developments that have taken place there. But we've also seen a couple of corporate changes in South Africa, CFOs and company executives resigning, and businesses unbundling, the likes of We Buy Cars unbundling from Transaction Capital, and most recently, the Nutton Credit business also now being announced that it will be sold off by the Transaction Capital guys. Corporate structures are so weird.
A lot of the time, they're not entirely planned.
Yes.
I think what happens is a company does really well, and
Yes.
it buys something that it thinks does really well, and it buys something else that it thinks it does really well, and before you know, you've got a mixed match of, a whole bunch of different businesses that you somehow now have to put into one package and
Yes. And
Be
I
the
suppose
boss.
what Marion Roberts saw in Australia. Their one business went bust, and unfortunately, it held the business that was doing good. And they were like, "Yo, we want that one," and it's like, "Nope."
Yeah, so I suppose this is all, it stems from accounting, right? So the fact that you have to consolidate into one set of consolidated financial statements when you're dealing with subsidiaries, and that creates a complex nightmare to be able to do this. And then for some businesses, it's easier to just say, hey, keep your own separate financials. We'll keep our own because you are doing one way
Your
and
thing
we
and-
don't want those numbers on our balance sheet. And as you say this, I'm thinking about
Well, they've got to
Sasol.
consolidate if it's above if you've got more than 50% of equity.
Yes.
You've got to then consolidate into your balance sheet. Income
Yes, but if
statement
you
and
have
the
a
like.
separately listed business that has its own sort of structure and everything,
So that
from
simplifies it. I think what
perspective-
happens is if you have something like Transaction Capital, which was, it's quite a sad story really, because they were a couple of years ago, the darling,
Absolutely.
they were doing so fantastically well,
Absolutely.
right? And then, nothing can go wrong until something goes wrong. And suddenly you have the situation where, like Simon said earlier, one part of the business is doing poorly, but it's now affecting every other part, which is,
Yeah. But it comes back to, and I think so, a lot of companies in the JSE are actually technically holding companies, in that there's a company at the center, and then they've got all these little subsidiaries, which they
I've
own
got a favorite.
they own 95% of, and the other 5% is some shareholders or something. But you made an interesting point where you said they're often not planned, and I agree with that. But I think the flip side is oftentimes they are planned. Pick and Pay had the Pickwick Holdings, which had, so the Ackerman family held a majority of Pickwick, which held a majority of Pick and Pay. So they effectively had 26%, but they had control of the business. And we saw with...
but that's kind of like building the plane while it's flying situation, right? They didn't think that they would get as well. Maybe they
I
did.
don't know.
But when they started, when
But
did
go
the
back
list?
to
You said
NASPAS.
1960
But I mean,
something.
go back to
I don't think
NASPAS.
it was gonna be as big as
We
it is.
trade the N shares because the A shares get 1,000 votes per one as opposed to the N's.
Yeah.
And that was a way of protecting what was then the Afrikaner nationalism, the National
Yeah, yeah.
Party media empires.
Yeah.
So sometimes they are carefully planned, but then a lot of them, and you go, and it's I think it's Remgro, which like no one knows, they've got B shares. And the B shares give them control. Pick and Pay still has B shares. So, and weirdly, the sense talks around the B share has an A share stapled to it. I don't know, like stapled? People have staplers. Anyway, so sometimes it is very carefully. Christo Visa.
I was just going to say.
Okay, the control structures, I mean, are probably then carefully planned. I agree with that. But
often
the companies that make up that
yeah.
group are sometimes the product of opportunistic, moves over many, many, many decades. So the companies,
Remgro.
So Remgro. Yes.
So Remgro, yes.
So Remgro, Pick and Pay,
Naspers.
We Buy Cars, Naspers, whatever. You buy, let's back this little internet company, see what happens. Boom, it goes massive. All right, let's do a bunch of delivery companies that'll never make money. So, whatever. Like you have this mix of completely different, unrelated businesses somehow in the same pot. And the only thing that you really have power over, I guess, is the director level, owner level is, well, how do we structure the shares so that we keep control of it?
Yeah.
But I think that's the other big thing there is, like Sai was mentioning about the B shares, is you often don't realize where control sits.
Yes.
And Pick and Pay is one such example we'll get into. But the other example is Christo Visa, as you mentioned.
Yeah.
I mean, I had a meeting with him. I was privileged enough to sit down with the man and chat to him about a couple of things. But in doing so, I just had a look at the structure, right? So when you would read all these reports around people's net worth and all of that stuff, and he only holds probably about 10% of ShopRite at the moment in terms of shareholding. But there is a specific share or specific voting right associated with him as an individual, which is not transferable, which therefore means he wields control at the moment, significant control and influence over ShopRite through that voting right
And it has
allocation.
no
That's
economic-
allocated
It
to
has
him
no
only.
economic value. He cannot transfer it to anyone else. But that kind of thinking around saying, I will water down my holdings, but the influence I want to have on the business, that is a different
But remember,
story.
he tried to sell that influence back to the board, and shareholders were like, hell no to
Yeah.
the leather, because with respect, it has no value to anybody else.
Yeah, because it was drafted
it's attached
specifically
to
for
It has an
him.
enormous amount of value to him. I can empathize with that because, if you spend a lot of time building a business, someone else comes in and tells you what to do, it's, simultaneously extremely scary because this is my little baby that I've grown over many, many years, and now I have to give it to somebody else to run.
And we see a lot of this in the big techs.
very scary.
Meta, Alphabet.
Elon. Just
But
Elon.
where they don't have, where the founder keeps control, even post listings. They don't have, I don't know how much Zuckerberg has of Meta, 10%, 20%. But at the board meeting, he's got 52% of the vote because there's those,
And that's because it's his baby and he doesn't want to let go of it. And I get that.
Yeah, you
And
see,
is it-
I do get it, but I largely dislike it because, I do think that if Mark Zuckerberg must go, then he must go. He must not, the fact that it's his baby is neither here nor there. He must be the best CEO for the position. The fact that he birthed it is irrelevant. If he's no longer the best CEO, he must, there's a door, humber.
See, I think
capitalism,
I'm no.
Capitalism.
I understand both perspectives, right? And I understand both perspectives because I've kind of been in both boats, right? Where you sit and you say, it's my idea, it's my vision. I've brought it to life. And I still hold the view that if it is your vision, nobody's going to be able to execute it the way you are, right? But I understand Sai's point of view to say that there comes a point where you're too close to the situation. You need some bit of distance. And if you look at the Ackermans situation and the Pick and Pay situation, is Raymond Ackerman built the business. He was there. He was close to it and everything. The Ackerman family now that has inherited the business is not as close to it as perhaps Raymond might have been in his younger days. And so a willingness to step back and say, we'll give up a little bit, we'll give back a little
So
bit.
that's like a generational thing, and I understand that context. But like, think about the restaurant owner that sells 51% of their business to Famous Brands,
Yes,
and then Famous Brands says, "Thank you, we're closing all your shops."
yes.
Yeah.
How many times does that happen?
But then all of them.
Well, how does that feel now?
Because
for that-
weirdly, I know 3 people who sold 51% to Famous Brands, and let's say they're not 3 happy people. But then you must bootstrap it. MailChimp's worth like 20 billion. How much funding have they taken?
Zero.
Who owns 100% of the business?
The founder.
Founders.
Telegram.
Exactly. I love it.
Telegram.
The founder of Telegram.
Yeah.
Another one. Another
I
example.
was going to say something really nasty now.
But
The only thing people use Telegram for is crypto scams, man. Come on.
that too.
Sorry, Telegram peeps, if you see this,
it serves
do
a
better.
purpose. But it comes back to, and I got no sympathy. I mean, and as I said, I literally know people who sold 51% to Famous Brands. They had a plan. It didn't work. They knew what they were getting into, right? You understand what 49% means?
And then they close your business from under your feet.
Well, in
That
some
is-
cases, the businesses were already bankrupt.
Okay, maybe.
So, I mean, this idea that I have control because I'm special, like nonsense. If you're special, we'll vote for you. And you're like, when you're not special. So one day he will be very old and he's still the boss because he has shares. Or what? Do we now get his kid? I mean, is that what happens? He leaves it to his kids, Ackermans, and now we get baby Zuck, and who knows? They might not be anything.
As sparky as Big
Big
Zuck.
Zuck.
Fair enough. That's a fair point. This is why I say I can understand kind of both sides of it.
I think you have to make the choice at some point whether or not you want your business
There
to
is
be
a
bigger
Rubicon.
than you.
No, there is a Rubicon. There is definitely a
Yeah.
Rubicon to be crossed where you get to a point and you say, I've pushed it up to this point. Beyond this point, we're going to need somebody else to get involved. We're going to need to look at things differently. And as a founder, that's the key difference between your business being bigger than you and your business collapsing.
And some have done it well. And I would name you Warren Buffett and Bill Gates. I mean, they don't have special controls. And Bill Gates, okay, he's mostly giving his money away. What's he?
Well, he's made enough of it.
Yeah, and he, by the time the sort of he left in when was it 2000 when he stepped down as CEO and went onto the board, he owned like a handful percent, like 5 or 6. That's fine.
So this is the question. Is I guess is
So
sort of
which comes-
sidetracking this conversation is your business is growing. Do you take investments and dilute yourself or not?
So, and to me, the question is because I've had this, as have you. We've all had businesses, and this is the question. And you've got to make, and it's a hard call. By taking investments, I dilute myself, but do I end up with a bigger slice of pie?
Yes.
If it does the
Well,
does,
sometimes no.
but that's
No, but-
and
but that's-
why
but that's
it's
for
a
you
hard
to
question.
structure.
That's why it's a hard.
But that's
question.
also for you to structure, is for you to then, it's the same, it's the Rubicon conversation to say, beyond this point, am I still actively involved in the business? Do I still want to have influence in the business? Do I still want to have a meaningful say in the business? Or am I comfortable shifting into the position of a silent partner? Because at some point, that is what you become, right? So, and the Rubicon might not necessarily be exactly 50%. It might be at the point where effective control no longer sits with you, where certain decisions no longer sit with you, where certain vision no longer sits with you. I, for one, don't believe that you need to be the CEO of a business to run the business, right? You can have a CEO, you can appoint the business, but you can still make all of the relevant decisions that pertain to that business, depending on how it's structured. But it could
why
be
have a
beneficial because it could be beneficial towards the market, the external market. Think about Pick and Pay again. It could have been beneficial to have Raymond Ackerman standing there and being the CEO of the company until he passed on. It could have been beneficial to have the next generation take over and say, this is the position we are not letting go of. Or you sit back and you say, the market likes a Sean Summers as a whoever, and that's what it is. Look at Remgro. Look at Johan Rupert. Johan Rupert is not the CEO of Richemont. But he best believe he controls Richemont. Best believe no decision takes place there without him knowing about it. You know what I mean? So I think when you look at business and you look at structuring and you look at especially a business that has many other businesses or that has many other assets within it, it's important to understand where you want the business to go. It's important to understand your overall goal as to, as you said, Petri, do you want it to be bigger than me? Do you want it to be something that I always have to have the final say in? Or are there aspects of the business where you say, I don't want to have the final say in this, this, and this, but the overall vision of the business needs to look this way?
And are you happy with owning all of a very small pie, or are you happy with a slice of a giant pie?
Much
And
bigger
the folks selling 51% to famous brands thought, hey, let's have
Small
a slice
slice,
of
big
a
pie.
big pie.
And it doesn't always work out.
And what they misunderstood is that famous brands is ruthless. Famous brands looks at numbers, doesn't work, shuts it down. Whereas, I know folks who've worked in the restaurant trade who've had different branch and they keep the non-performing. And I'm like, why? And it's like, and there's like, great staff and this and that. And it was my first restaurant and I met my wife there. And I'm like, but none of this is about numbers. Famous brands is like, you have a wife, don't care. It's this thing making profit. Yeah. And I think that's the distinction between the mom and pop.
I guess this takes us back to that little Starbucks Chipotle thing where it's like it just feels a bit inhuman in the end, right?
Yeah. I'm going to turn you into a socialist.
So I'm just going to repeat what Sai said. It's capitalism.
Yeah, and you don't have to sell your sauce.
You don't. But this is the thing. I think for me, what you're saying about the pie thing is so important because younger Jimmy was adamant about, and I'm still fairly young. I say this like I'm still fairly young, but new age entrepreneur Jimmy wants to start a business, right? Was I must own 100%. I must have control over this. I must do this. I must do this. I must do this because it's my vision. It's my baby. I mean, you can resonate with that. You founded Herenia, Just One Lap. We've all done this, right? But there comes a point where you say the strategic benefits of bringing on a partner for the percentage of ownership that I'm losing versus what I'm gaining makes more sense. Your thing as a founder is to discern whether or not that partner intends to cannibalize your business or grow your business.
And it's a hard...
That's where your pain point is.
Slowly morphing into like a small business podcast. So one of the things that I sort of think about is like, let's say, for example, I go and I raise $100 million for Herenia now, right? I could spend that money in a year. Guarantee you, we'll see my brand everywhere. Like we'll grow this business massively, right? However, the equity that I sell now, let's make it smaller numbers. Let's say I sell 50% of the business for 5 million rand, right? If the current growth rate continues, in 10 years from now, 50% of the business will be worth considerably more than 5 million. So over time, the half that you sell today, in 10 years from now, is going to be the biggest mistake you've made.
Yes, but at that point, you haven't crossed your Rubicon, right? So your Rubicon, you've just pushed out by 10 years.
Yeah.
But think about the exact same scenario, right? And say, if in 10 years' time, so let's say the opportunity you have now is 100 million for the same 50% and not 5 million.
Yeah, then
How much further in 10 years?
Then it's the best decision
Then
you've
it's
made.
your exit.
yeah, but
partly
often,
your
but
exit.
often you can't sell your company at 10 times what it's worth or 100 times what it's worth. It's worth what it's worth.
But if you take in 5 million now for half the business, and in 10 years the business is now worth 500 million, that's not the worst decision you've made. That's the best decision you've made. Because there's a real chance that if you don't take the 5 million, your business in 10 years' time is
doesn't get to that point.
It doesn't get there, or it's only worth 7 or 8. And that's the trick. I disagree that you now are aggrieved that you're only worth 250 million instead of 500 million. I think that
You might have been only worth 100 million instead of 250 million.
And that's the hard question, is that when someone comes to you with 5 million, if you got 5 million, I got a business to sell. Just so. When someone comes to you with that 5 million, that's the question. Do you take the 5 million and it's a disaster and it fails? Do you take the 5 million and it grows to 500 million? Do you not take the 5 million and it grows to 500? Or it's all of those different
if you have a situation where you have a trajectory and you think to yourself, like, in 5 years from now, I won't need this 5 million.
Well, then,
So-
but then you're still-
decision you have to
Then
make
that's
now.
that's the point I'm trying to make. It's like it's really hard. So now you
No,
sell.
yeah, we
It's like
agree
the
it's
most
hard.
expensive thing you've ever sold.
But as an entrepreneur, that's always the entrepreneurial conversation, right?
Is that
but if you
the
think
time
about
value of money and
but if you think
opportunity
about your situation like that, right? God forbid this. Hope this doesn't happen to anyone. If you make that decision and you say, no, I'm going to continue bootstrapping, continue going for the next 5 years or for the next 10 years, and the very next day you have a heart attack and you can't, that's a completely different conversation. So you make the decision for the here and now. And to bring it back to what we were talking about from a company valuation perspective, think about someone like Telkom. You've got a share price that's sitting at 20 Rand. It's come down from that MTN offer that got you up to 55 Rand. No one is interested. You've got a 7 billion Rand asset, or just shy of 7 billion Rand in SwiftNet. The decision to unbundle, the decision to get rid of part of your baby needs to happen. You can keep the infrastructure business, but how much does it cost you to maintain? Is it worth it? Or do you take 7 billion Rand right now? Right? But I suppose this leads to a very important conversation, which we will have to have another time, and that is around valuations, right? If we're saying 5 million for 50%, at what valuation is that? How do we determine valuations? And what is a fair valuation that kind of bridges the gap between capitalism and socialism and everybody's
And usually the person with the checkbook has the power.
Usually the person with the checkbook has the power. That's the deep dive for this week. And Investor Insights this week, we're taking a look at some interesting developments from the South African Reserve Bank alongside our preferred picks to update on our wall. Nicolette's not joining us this week, and she's got a very busy Women's Month. So we start with the SARB. The SARB went on a very interesting fact-finding mission, right? They went after a lady by the name of Berdine Odendaal, who was said to be the mistress of the late Marcus Jooste. They went after 60 million Rand of her assets. They froze those assets, saying that it was a breach of exchange control. I covered the story at length on radio. I even tried to speak to the Reserve Bank themselves, and the Reserve Bank wouldn't give commentary. They won that. They were allowed to seize those funds. Those funds were paid over to Treasury. But the more interesting thing that we saw from that was it set a legal precedent.
Yeah.
And that legal precedent has since seen the SARB go after 6 billion Rand of Steinhoff's money. And just this week, so there's a particular page where the government gazettes are published, and I just keep an eye on it once a week, every now and then I keep refreshing the page, and you actually get the gazettes that are published because it's part of the regulatory and legal requirements that these things are shared with us. And the latest round, this week alone, around 30 million Rand was seized yesterday from 3 separate businesses. It's an ongoing thing. So the SARB is effectively now using this legal precedent that they have to be able to come after anyone that they feel has breached exchange control regulations without having a conviction against them or having any form of case won against that individual. So if the SARB believes you've breached exchange control, they can freeze and seize the money. And that is an extremely interesting dynamic for international businesses.
And I mean, and you could take SARB to court. I mean, of course you can. You always have that. But I mean, and we've seen. So to your point, and the key thing is they got that legal precedent. As far as they're concerned, they've got the law on their side. And until such time as a judge, and probably ultimately maybe the Concourt says you don't, they do have the law on their side. And they are then just doing it. I mean, we've seen it with SARS, the whole coronation thing, which ultimately they lost. If they'd won that, there were 100 other companies out there that knock on the door who were doing the same thing. So they're trying to set that precedent. And then once they've got it, they flex it, they use it. It's not like, it wasn't about Berdine Odendaal. It wasn't the story. That 60 million.
That 60 million meant nothing.
It was nothing. It's the precedent that they've now got. They've got a legal precedent, and they now just go in and attach. And I see it. But I mean, it was 5 and 2 days. I mean, I've never heard of any of the companies that were getting attached.
Of course.
But 5 and 2 days. Bang.
And there's no real limit. There's no real, because it's such a general precedent. The only real thing that is said about it is, does the SARB feel you have breached exchange control regulation? I think the one they usually reference is Regulation 22B in terms of the Exchange Control Act. If the Reserve Bank and the Prudential Cluster feel that you have breached this particular piece of legislation, they are empowered to seize the funds that are in an international bank account. Now,
And these are
not in an international bank account. They're entitled to seize any funds that they believe are in breach of that exchange control, regardless of where those funds may be sitting. But I suppose they'd be sitting in South Africa. They'd either be sitting in a global type of account or a domestic account, either in rands or in a foreign currency. but SARB is not restricted.
Yeah, and so in this case, I'm looking at the three that came out yesterday, all with first round, $700,000, $670,000, $350,000. These aren't like,
Works out to 31 point something million rand. I did the calculation
Yeah.
yesterday at 18 rand. So it's not small amounts.
yeah. Look,
But the Steinhoff thing was a clear situation there, and I almost felt that perhaps the situation with Bedien Odendaal was a build up or a this is our test case. Test case survives, wins, cool. Now we can go after the 6 billion. And now as Steinhoff, that went through that entire raise exercise with the Pepcore holdings and putting new shares into the market and all of that, raising 6 billion. Now you still hold a significant portion of that, but are you going to do it again? Because if you do it again, there's nothing to stop the SARB from coming back and saying, we're going to seize those funds too.
no, I just wonder why SARB doesn't just take the shares. Why do they want cash? Why not assets?
Because cash is easier. If I have to have assets,
point.
I have to go
Yeah,
and
yeah.
liquidate. Cash.
And IBEX, which is the new Steinhoff, is situated in Amsterdam.
Precisely,
so
which could take forever. So the moment
much
there's
easier when you just phone FNB and say, yo, got an account
put a
number for
freeze.
you.
That's it. There's the account number. Put a freeze on it. And when you then, so the other side of the interesting conversation here is to say once the funds are frozen, they are then forfeited onto National Treasury.
Yes.
Which is now a new income stream for National Treasury beyond just tax collection, is whatever money is in a bank account. If that bank account is under investigation, under suspicion, and that money gets handed over to National Treasury, for you to get it back is going to be, we don't even know if anyone, Bedien Odendaal did attempt to go that route and try
you can phone lawyers, but it's going to be expensive, and you basically got to either take it to the Concourt and hope that you win, and you're not even sure they will hear it. Never mind that you will win it, and it's going to cost you arms and legs.
It's a very interesting time. It's a very interesting dynamic, and I think it's going under the radar a lot because it's not involving big companies necessarily at the moment.
Fair point. Companies that we just never heard of. Is it bad? If you are in breach and there is precedent, well, boom, you lose your monies.
No. So look, from a regulatory standpoint, if you have been found to have broken the law, then there's nothing anyone can do for you, right? So I think for me, when I looked at this initially, it was around trying to understand the specific provisions of the regulation, trying to understand how you are determined to be in breach of said regulation. When you read the legislation, it says what it says about exchange control and all of that. And what did you breach? I think we don't have that clarity.
And there's also, instead of SARB freezing the money, taking you to court and using this as your precedent,
they don't need to.
They just say we don't need to, and that is perhaps
that is the question.
That is the question, because now SARB is both judge and jury.
And executioner, because
and in this case, executioner.
They will then take
that
the funds.
Perhaps is the slightly messy part.
That's it. So I wonder how this is going to unfold and how this is going to continue to play out, especially in the realm of private businesses, because a lot of these businesses I'm seeing from this list, you go to the CIPC or whatever, they appear to be private entities, right? So if there's a public interest in a business and there's a public score on that business, that I can understand. You're doing that in the interest of public, If it's a private business, then every private business ever created in South Africa is susceptible to this, as long as you've done an international transaction at some point.
Well, and probably individuals too, right?
That's the thing.
Why are individuals exist?
Well, the principal case involves an individual.
Yeah.
Then the subsequent case involved a company. So yes, effectively what it means is if you've done an international transaction and at any point in that international transaction, the Reserve Bank of South Africa feels that you've breached exchange control, they can seize money. Let's do some picks. Let's update our wall. I think we've got a couple of things on the wall at the moment. I want to just go through... we've spoken about some of them, and I want to let's go through additions before we go through maybe some adjustments on what is on our wall. How are we feeling about DRD Gold? Let's start there.
So Mishima 2 weeks ago, and we never got to because we ran out of time, her fave gold stock is DRD. They I forget why. I can't even remember what their all-in sustained cost is. But make no bones about it, the gold's 2,500. Lots of compelling reason why it continues to go higher. And these little gold miners, as we've just discussed before, and their headline earnings is only going to be up between -1% and 9%. There must be some oddities in that. That was from, but the gold stocks. I mean, pick yourself a gold stock. DRD is the one that's kind of the lagger, perhaps. If you look at in terms of chart, we've got Anglo Gold Ashanti almost at highs, Harmony at almost at highs, or the Harmony House from 20 years ago. Goldfields well at highs.
I'm going to throw in a spanner in the works because we now have that little segment on our wall where we can look at alternatives to a particular pick. And I know you like Pan-African resources.
Yeah,
so Pan-African, because they can do it much cheaper.
My picks are Pan and Anglo Gold Ashanti. Pan, the little one, trading all-time highs. Is it an all-time high?
It is all-time highs.
Yeah.
It's just shy of R7.
Yeah, just shy of R7. Yeah. I mean, they are masters at eking gold out of the ground at ridiculously low costs. Anglo Gold Ashanti do it at a markedly higher price, but do it at a markedly larger amount.
Scale, yes.
They do it at the scale.
Yes.
And that's the story. So, yeah, I mean, if I'm picking a gold counter, my picks are Pan and Anglo Gold.
Not DRD.
No.
Interesting. But I suppose this is why we have the alternatives out there. Sometimes there's a better pick out there that might make a little more sense.
And Mashima Gama, who's way smarter than either of us with the chart in hand, says we were both wrong.
Northern Platinum went through an update this week. We got that update. Very interesting kind of outlook. I know from a PGM perspective, there's very little these guys can do if price stays where it stays. Average pricing hasn't been the greatest. And Moshima mentioned this as well. We've looked at this as well. Until the platinum price gets to a certain point, the PGM guys kind of struggle along. But the good news is they've kind of scraped the bottom of the lowest stocks can get. How are we feeling about Northern?
I don't like platinum stocks. What's interesting is they've all gone big on chrome. And chrome is your greenest metal in the sense in that it's infinitely recyclable. Well, not chrome, not stainless steel, which is what chrome is used for. I chatted with Bruce Williamson from Integral a couple of weeks ago. He's a mining expert. And he was talking, he likes Northam because of their chrome exposure. Because what's happened is they're selling it into China. And there's nuances in chrome in terms of purity and the like. So a lot of the furnaces in China are now set up for South African chrome from Teresa or Jubilee or whoever the case may be. And what we see in some of these mines, if we go back 20 plus years, I suspect there was almost a gentleman's agreement where they would pull chrome out of the ground, but there was a chrome miner, was it Samcor or something like that, I forget, and they would just leave it in tailings. So basically, they're just mining tailings. But you know what, I buy Northern because they've got chrome? No. The PGMs are in an existential crisis. We need PGM prices to improve. They're not. And until they do, I would sit on the sides.
Let's look at international stocks. CrowdStrike,
Yes.
they went through the most. I remember the share price coming down to about 200. I think I liked it at 200.
Exactly 200.
Yeah, I liked it at 200, and we're back at 260-ish, if I remember correctly from last. 262, 263-ish pre-market. You liking it back up to 300-ish? Has it got enough legs in it there?
I think even more. I mean, ultimately, if you look at so the disaster which befell them just recently was a totally epic disaster. There is a class action lawsuit from shareholders to which I plan to I'm trying to get onto it because I'm a shareholder. American lawyers don't answer my emails anyway. And are there going to be lawsuits from the likes of Delta and others who, I imagine the T's and C's are pretty tight. But just the way that they do it, they've got this thing called Falcon and they've got little modules and you can pick and choose your modules. Changing is not easy. I know that folks are going to now look a little squiffer at CrowdStrike, and I know that, as Wayne McCurry always says, markets have memories, but I think we will move on from it in time. And this might be one of those famous Hail Marys. But I like the business. And you know what? I mean, I bought some at 380, right, before the disaster. So I've been buying them from around 160, and my most recent purchase was 380. So if I like them at 380, 260?
Definitely like them. Okay.
Yeah.
Last one for the updates or for the new additions, NVIDIA.
So NVIDIA results coming out on the 28th. They probably going to knock it out the park, although there has been some supply chain constraints. And we can see that from the people who are buying their chips, who've been even the older ones, the H100s, the new Grace Hopper, Blackwells, etc. They've had dates pushed out, which means that there's been a bit of a supply chain hiccup. But the short version is that nobody is even close to what they're producing at this point in time. Now, we had Alphabet say a couple of weeks ago, it's like, we're spending a lot here and we don't know what the revenue is. It's a build it, they will come, hopefully type of thing. But at this point in time, I mean, this is a stock that is eye-wateringly expensive on every metric. But if you think AI is going to be around in 10 years, they're going to make a truckload of money over those 10 years.
First mover advantage, I suppose.
First mover. And they're so far ahead. And it's small things like they have their own software. So you can have a bunch of the I don't know if it's the Grace Hopper or the Blackwells or whatever. And they've got software that basically merges it so that the system sees it as one, all of that sort of thing. And that software is bespoke, it's proprietary. So you're an expert on the Grace Hopper or the H100 or something. The new chip comes along. It's going to be slower, it's going to be more expensive, it's going to be less efficient, and you've got to learn a new programming language. Their biggest problem is their success. I mean, that's their challenge, right? They can't fulfill the orders, which means that there are some engineers out there who are saying, well, what are the alternatives?
And you look at Intel as an alternative, you look at AMD as an alternative. Are they batting in the same league?
They're trying, but they're not in the same league.
So we're definitely liking NVIDIA at the moment. We're definitely seeing some value there.
And I hold both, so I'm talking my book.
It's got a place on our wall. Okay, I want to have a look at some of the other guys. We have to move some of these guys down. I see we've got, we had BAT, we had Nike, we had Growth Point, we had Pepcore. They're all in our load up kind of area with Pick and Pay, with Impact, with the S&P, with Alphabet, with BlackRock, with ShopRite. And for me, it's really difficult to want to move any of them out of here. They're still good stocks.
Growth Point's just broken higher. Pepcore.
Pepcore's running.
Pepcore's suddenly running. I mean, even ShopRite.
ShopRite is top 300, is back above 300.
It's back above 300. I mean...
And results conversation is coming up on the 3rd of September, official results. We got that 53-week update, but official results will be out around the 3rd of September.
I'm on leave that week, which is sad.
It's okay. I've got a conversation with the CEO. We'll definitely cover
I got
things.
upgraded to an invite to a conversation with the CEO.
There you go. But you're on leave. Okay, so our load up area kind of looks like it's staying the way it is. We buy cars we still have as neutral. Do we want to move that with the adjustments that come with transaction capital and nut and credit, or do we want to see something more? That doesn't affect We Buy Cars at all.
We Buy Cars, but again, it's breaking higher on the weekly chart. This is a good-looking chart. I mean, it. You know, the only one that, I keep on going back to Zeta, the car, not the agri, and that's like a boring chart. But like everything else that I pull up is just breaking higher.
Quantum Foods. We've got that not in the best place on our charts.
Yeah, Quantum Foods is in a void.
Okay, let it stay in the void.
Yeah. It's done at 8.52. Last time we said avoid, it was 11. Time before it was 13. Keep on avoiding.
And with that, it's the end of the show. Until next time, investing isn't hard. Just try it.